Hey, everyone who is attending this live stream from Credit Suite. My name's Lane McGlesson. I'm actually will be filling in here for Ty Crandall to be able to go over this initial kind of podcast of information we're providing regarding on opening up book of business financing. I know I'm a little bit early here, so I'll wait here for another minute or two for those who would want to jump on to the live stream to be able to go through this information here with us. Today, specifically, this topic, book of business, is one that has to deal with financing, on how to be able to take a portion of your financing and look for other ways to obtain some business funding. It is a very unique niche that this is following under to be able to do this book of business, but it is something that might be interesting or you might not have been aware of. So hopefully we can all, I guess, educate ourselves and learn more of this information together as we go through this. Initially, before jumping right into the slideshow here, wanted to kind of go over some information about what's been covered on past podcasts before. And this is just giving a breakdown of what lenders are looking for when it's coming to business financing. So just as a quick review, most lenders are looking based on the 3 C's. They're looking at credit, they're looking at your collateral, or they're looking at your cash flow. So they're looking at those 3 primarily objects to be able to determine what funding options that would be qualified for. When it comes to personal credit, most lenders will look for all 3. They're going to look at your credit, your cash flow to make sure you can pay for that loan, as well as whatever the collateral may be. May it be a boat loan or a car loan or a mortgage. When it comes to business credit, there's funding options that can come from just one of those 3 options. So if you have collateral, there can be some funding option available. Or if you have good credit, funding options can be available. Or if you have cash flow. In this particular program, the reason why I wanted to run through that is book of businesses really falls under the category of collateral. It's not as worried about what your overall credit is showing, but it is more on just the collateral of what you've built out. So based on that, let's go ahead and jump on in and start going through some of these slides. As many of you know or are following here, Ty Crandall's our CEO here at Credit Suite. There's our contact information, which can also be found just directly at our website at creditsuite.com. And if you look at the bottom, if you do a quick screen share or screen shot, you can go to creditsuite.com, get funding to be able to go through more information. So jumping right into this topic, here's the question. The question has to do with what is a book of business? So a book of business is the best way to be able to describe it is this is a product that professionals use, basically listing their accounts or their clients. Some might call it like their database. It's where you would have your leads, your information. Their finances and legal professionals are likely to use this particular term, and it has to deal more specifically with insurance agents. So an insurance agent typically will have this book of business because it's clients that they have that already are in need of renewing for future services that are provided. But it doesn't have to be just with insurance agents. You can have reoccurring clients. An example that we put in here is, say for an example, Netflix or Disney technically has a database or a book of business of clients who are current subscribers. When their subscription comes due, that is what they're looking at as future subscribers will automatically renew. So in a way, there's a sense of collateral there, as they have a customer base and there's a percentage of these individuals who will automatically renew their accounts. So you can guess your future sales based on your past history. And this is similar to what a book of business does. So an insurance agent is continually adding or subtracting to their book of business. The more clients they have that are on their monthly subscription, the larger that insurance company goes. Next is, what does the book of business contain? What it contains is, this book of business includes all the customers, their clients, what you have worked for here in the past. As you get new clients, you'll add them into your information, into this list or your database, and it's always changing. As that's one thing to be aware of. Another way to look at this, some kind of use the description as a pipeline. When you're working your pipeline or you're building out your business, you have a finding pool, and those are individuals that you're marketing to. When they come into your organization, they're a part of your retention pool, those who you're working with and helping them through the process. And then you continue to build through a referral base for additional accounts. If you cut off the water source and you no longer have a finding pool and you're only focusing on the clients you have, that is a scenario that isn't necessarily good, meaning that gradually your pool will decrease and decrease. You always want things coming into your book of business. It also has new information that's being added into your clients just to create that rapport and relationship as you progress. Other things that the book of business contains is, it contains information of revenue that your clients are producing, basic demographics like the age and occupation. You can even include any unique information if they like specific sports, things that you can remind yourself about these particular clients, as well as a place where you can always ask for referrals for that finding pool to be able to bring clients back into your Here book of business. It also will have what potential future needs might be. If someone in the insurance agency mentions to you that they're looking on purchasing a boat here in the future, you might include that in your book of business to follow up on an annual report with them and seeing how that progress is coming, because they probably might need additional insurance needs for those additional purchases. Here is a link over here that kind of talks about the different balanced career options for the book of business overall, that you can take a screenshot over. Now, the next question that comes to mind has to deal with regarding on what can a book of business actually be used for? Because you might have this information here and it's helpful, but the real question is how can that actually be valuable here for your business in the coming future? So beyond that, it also can maintain this information with your clientele. It also can be used, this book of business, as a place to store this important detail information about your clientele. And it also helps you build up those relationships, because truly when it comes to business relationships, the importance is being able to have the ability to help individuals solve their needs. And if they have a need that you can solve, then that's why most of us here are in business. The best client acquisition, it comes just to add up the businesses to do with what that client can help is, versus just getting a new client. So if you have an individual that you have been helping, in the case again regarding on an insurance agent, it's easier to keep a current client happy so that they can just renew their car insurance or home insurance with you, rather than having to go out and find new clients overall. So definitely put some effort into keeping the clients who have already signed up for your particular program happy. What is the book of business financing? What this is going to do, this is the next question that's involved of how a book of business, kind of a tongue twister there, can help with overall on that financing. What the process is what you can do is, a book of business has the ability to be that collateral base. So as mentioned earlier here, is you have the different 3 C's. You've got your cash flow, you got your collateral, or you have your credit. A book of business truly is collateral, because it has kind of in a way that you would have accounts receivables for a company. There are future payments that are coming your direction. In a way, these are kind of accounts receivables that an insurance agency would be able to look upon to be able to receive. So these insurance agents, they can actually get low interest long-term financing because of this renewable commission, because it falls under that category here as collateral. This program is a best program available specifically for insurance agents. There are other funding programs if you do have accounts receivable that would fit that are similar to this program, but for specifically a book of business financing is specifically looking towards insurance agents, because that's how this funding option was created, was specifically for them. It also can help when it comes to the approval requirements and the approval terms. One thing to keep in mind is most insurance agents have the ability to do this because the clientele in which they have is technically that agent's clientele. One thing to be aware of, some companies, for an example, State Farm is not eligible. The reason why is State Farm clients are the company's State Farm clients. They're not, in a way, have ownership by the specific agent. So in that particular case, if you have an insurance company or insurance agent under the State Farm brand or company, unfortunately, taking their book of business and using it in financing is not an option. So once again, why book of business financing? Traditional lenders like major banks will tend to look for hard, tangible collateral. And it's rare for an independent insurance agency to have enough hard collateral to get large enough loans to buy an existing book of business. Hence, what you'll have to find is someone who specializes in the finance industry business. So what this particular means is you can't just go into a normal bank and apply for funding using your book of business. Most bank agencies are looking through their traditional aspects. So they're going to be looking for tax returns, profit and loss statements, personal credit to determine what the business can be approved for. If you're looking for book of business financing, there are specific companies out there who will be able to lend based on that specific need. How does book of business financing work? Let's go through that so you can have a better understanding. The insurance company has a book of business that's valued by a professional company. It's kind of as if you're getting an appraisal done on your company to see the value of what that overall book of business is. There's many companies out there who will conduct these business evaluations to give you an idea of what it would be qualified for or what it would be valued at. These valuations help determine an appropriate sales price on that particular piece of collateral, your book of business. From there, the insurance company will take the average sales price for a book of business, and then it tends to multiply that often between 2 to 4 times what the annual earning is done. In a way, what they'll do, as many evaluations, is if you're selling your business, you can have someone come in and do an evaluation on your overall business based on your revenue, your growth patterns, on where you're currently at. And if you are going to sell that particular company, usually they'll multiply it by 2, 3 times. I've heard even as many as 5 to 7 times what you're doing on an annual basis if you're going to put that company up for sale. The same concept's taking place here with book of business. You're getting your professional evaluation, determining what that appropriate price will be, and then you're determining that multiplying by 2 to 4 times. This means if you're purchasing a book of business, chances are is it will take 2 to 4 years to recoup the overall cost of that initial purchase. Now, how does this book of business financing work? Number one, you would have to create a business plan. you would want to go through the steps to demonstrate to the lender that you are legitimate in your intentions regarding this book of business and where you're planning to purchase it. You'll also have to show that you have knowledge and experience to run an insurance agency. So if you're approaching your lender to purchase this book of business, they want to be able to see past history. A brand new startup company, unfortunately, might not have that history, so you might have to be in the industry beforehand. And then you also need to have a well-written business plan should address any of the potential changes that you may face by acquisition of this other company's book of business. It also needs to have clear descriptions on how you intend to maximize the profit potential with the new asset that you're acquiring through this purchase. As well, here's some more information on it, on how did the book business financing work. You have to then turn around and continue to search for different lenders. Chances are that your financing request will be approved by traditional banks or a lender that is extremely small. Narrow that search down to specific specialized lenders that work just with insurance companies or insurance agency owners. And then these specific niche lenders will understand the potential power of a large insurance book of business. And they also will recognize that the book of business is an asset, that collateral, to secure the loan. Consider and evaluate the different offers. After you've provided all requested information to a specialized insurance agency lender or broker, they'll typically come back with multiple offers. Check each one, find out which one would be the best fit, most appropriate for your current situation and timeline and availability, budget, and then let the different lenders know and have a place a different value on the book of business that's going to be used as collateral. So based on all that information overall, what you want to do is gather as much information, kind of shop around with these different lenders, and then you'll consider who's giving you the best offer and what's presided. Other things to consider is the amount of the loan, the fees, and what the repayment term is going to be. After you do that entire evaluation, then you can really make that determination on the purchasing, the price, and if you're moving forward with the acquisition of this book of business. Other information here to consider is it's a good idea to get more than just one business evaluation done. Since each company uses slightly different standards and formulas in a way to evaluate your insurance book of business, it's good to get different quotes so that you can have that different information to consider. At the end of the result from each valuation can vary. So based on that, you want to look at the lenders kind of like as if you're hiring a new employee. You want to be able to take your time, but make quick decisions after your decision has been made. So you're looking at all your different candidates, seeing all the different resumes that they're presenting over here, and then you're making your decision based on what these lending institution resumes are providing. So these lenders will rely heavily on the valuation to determine the strength of what your book of business will be able to contain. So the best possible valuation then is necessary as you're considering that information. Now, some have asked the question regarding on how you calculate the value of the book of business. What a lender typically looks at is they look at a mix of businesses. So what's currently happening in the industry. They're going to be looking at your cash flow and the efficiency of the operations. Like most lenders, all they're trying to do is mitigate risk. They're looking at the ability to be able to say, how profitable will this lending choice be in their mind? So as they're mitigating that risk, they're simply looking at past history, because past history is the best indicator of what future performance will take place. So they're looking at what the past history performance is from this book of business, the renewal rates, how often, what are the daily amounts that are being projected overall, or even on that monthly basis of these renewals. And then that's what helps them determine that overall value of the book of business. This is to see how likely the agency can continue in the future generating consistent commissions from their existing clientele basis. I don't have the exact number here, but I have heard in the past that on average, there's a percentage of individuals who will switch their insurance company on that every 6 months or every 10 months. So based on that percentage, there is a calculation that this book of business can determine on how many of this clientele is still going to be keeping with the existing company or possibly switching. Other things to consider specifically in the mix of businesses, an agency mix of business is often just as important as the volume of business. If you have diversity within your book of business across agency, clientele, business lines, and insurance carriers, it can be more favorable to a specialized lender. That way you're not holding all your eggs in one basket. You have them spread out based on different categories so you can be able to help. Second category, it's often stronger agencies are those who not overly depend on one carrier, but over a small group of clientele. When it comes to the cash flow, what they're looking for is insurance agencies are often have more reliable cash flow than other mid-sized businesses. This is because they don't have to reinvent themselves every year. They have their same product, they're keeping their clients happy, and just having them be able to renew. They also can deliver the service that the individual business consumer depends on year in and year out. And in most cases, we've noticed this because the laws of the land require you to have certain insurances on your properties or on your business or on your vehicles. For that very reason, there's a really high likelihood that people are going to renew and continue with your purchasing of your insurance. Plus, they can generate that predictable cash flow from the outcoming commission revenue just based on their renewal rates. Now it comes to the efficiency of operations. Besides just the cash flow and looking at the diversity of what's on your book of business, they want to make sure that the efficiency of your operations are also good, making sure that you know how to run a business. The key to maximize the value of an independent agency is to effectively reinvest in the business while minimizing the unnecessary expenses. Lenders who understand the insurance industries will want to lend to agencies that will run their operation more efficiently. And those of the agencies that will run will truly see a command in their premiums when it comes to their time evaluation and sale, as well as evaluating the book of business for collateral purpose. Now, a couple of things before we finish up on this topic here of book and business is you want to be able to, a couple of things really to keep in mind is that an insurance book of business is or will be the collateral that is securing the new loan. The same way that a car is the security or collateral on a car loan, or a house is the security and collateral on specifically a mortgage. The book of business is the collateral on this new loan. So if there is a default on that loan, the concern is the same way that you can have a car be repossessed or you can be foreclosed on, you can also run the risk of losing your commissions based on that book of business. So that's how valuable a book of business truly is. There's benefits of having a book of business financing. If you're in this category, in this niche as a finance or in an insurance agent, all you truly need to do to qualify for a book of business is have renewable commissions. You can even use your book of business as an independent insurance agency if you're buying as that collateral for approval. And this means that your personal credit doesn't have to be phenomenal. It can be average and you can still get an approval. Lenders are mainly looking to make sure that you have a viable book of renewable commissions for your insurance agency. Other benefits here to consider is your business doesn't have to be perfect. You do need to supply extensive documentation that lenders typically can demand. So to get approved, you just need a quick review of your credit and renewable commission breakdown. Now, that covers all the information regarding on the book of business. Before going on to a separate topic regarding on other funding options, the thing to consider is this is a very specialized funding option that's out there. So in the world of business financing, there's multiple different funding options that can be present as traditional business loans or commercial lines of credits, even into just doing credit cards that can be established based on personal credit. The book of business is something that is specifically looking at when it comes to an insurance agency. The closest funding option that's available beyond this would be like an accounts receivable. So if you do have accounts receivables, which in a way are renewable, well, they're not renewable, but they're future payments that are on services that have already been rendered, but you might have a renewable source that can be considered in a way account receivable, such as in the example of Disney or Netflix, because they have a renewable monthly subscribers. There are funding options that can be based that off as well. There is another funding option to kind of touch base with. I know Ty has gone over this here in the past. Before we get to that, that other funding option, here's a couple of viable alternatives to the book of business. So this way, if you don't want to put your book of business online, or if you're in the State Farm agency and you're not able to do that and not able to get high enough evaluation to cover the loan, not to worry, there are other alternatives. One of these is the credit line hybrid. This is a program where you're basically piggybacking off of good personal credit history to be able to establish business credit cards. It actually can be done with startup companies. It doesn't require to have any length and time in history. There's no docs, and it can also start off with introductory rates as low as 0% up to the first 18 months. Most of the approvals we've seen here currently have been between a 6 to 12-month range, but it kind of depends on which cards are being applied for. It even helps to build up your business credit history, because oftentimes these accounts are actually be reporting back to the business credit bureaus. Some of the requirements specifically on this hybrid program is that you need to have a 680 a FICO score or better. Here is a link before jumping on to the next slide that can allow you to even do a quick open up the conversation with our funding team to be able to see what you can qualify for specifically on this particular program. Okay, the credit hybrid program also includes, this program is designed to help clients get based strictly on their personal credit history. So the lenders aren't going to ask for the financials, bank statements. They're not going to ask for business plans or even resumes or any other burdensome documents requested at more conventional lenders' demand. They're specifically going to be looking here at your personal credit. Other requirements that they're going to be looking at is they are going to be looking at length and time in history. So that is important. They are all going to be looking at any major derogatory items, which I think actually are going to be covered here next. So let's take a look. So this is what they will be looking at in reviewing your credit report. So you want to make sure, yep, no derogatory items are on the report. You want to make sure that no open collections, late payments, tax liens, judgments, or other type of derogatory items. Other requirements on this specific is you want to make sure you have fewer than 5 inquiries on your credit report during the last 6 months. After 6 months, oftentimes the lender will consider those inquiries old. But if it's before that time frame, you want to make sure you have those removed. You also need to have established credit. What that means is if you only have a brand new primary credit card that's only been reporting for the last couple months and you apply for this hybrid program, unfortunately, it won't work. You want to make sure that you have established credit that's at least 2 to 3 years old, or if you happen to have a car loan or a mortgage that's reporting in that length and time, because the lenders are looking for that length and time and history. So you want to look at these open revolved accounts are reporting to your credit report. The other important thing is the utilization on all your accounts should be at least 40% or below. We've seen some cases where even if you get a better response, even if it's closer to 30%. So the lower that utilization rate is, the better the overall possibilities of getting an approval will be. Now, some have asked the question, does it have to be on average over, meaning if you have one card that's maxed out and all the rest are paid off, and if you spread it across the board and it's 40% or lower or less, does that work? And the answer is, unfortunately, it doesn't. It actually needs to be 40% on each of your credit cards or below to be able to get the best results. And then there is a financing. So applying for this financing can be a quick step. Typically, it takes 2 to 3 weeks. Usually in the first week, you'll actually have an answer of what you can get approved for, but normally it takes about 7 to 10 business days before you actually receive the cards in hand. So that's the overall time frame that you can expect to receive to be able to get this particular hybrid program. Just as a review, looking over this information, going back on Book of Business, the Book of Business financing can be a viable means of leveraging a viable asset. It can help purchase the Book of Business or an agency or get financing to help improve one. The Book of Business is valuable, but varying types of valuations may provide dissimilar results, as well as the Book of Business financing is not available to State Farm agents. But there is the alternative options that we just went over. And those alternative options could be the accounts receivables or traditional funding based on your revenue, or through even the credit line hybrid as an option to be able to get approvals based on good personal credit. Because this is a quick, excellent way to build up initial business credit, and your payments are reported, so it helps build up that business credit history as well as you're going through it. And you won't have to provide extensive document. It's just a stated loan. This process can be done pretty quickly. Again, as I mentioned, that it can be a process where it's only 2 to 3 weeks time frame, where the initial first week, you're able to get that quote and be able to determine what you can get overall approved for based on a soft pull on your personal credit history. After that, it typically does take 7 to 10 business days to be able to receive those cards in hand, so about 2 to 3 weeks time frame. And it can also be done as a funding program all in one place. There's no upfront cost on that fee, but there is a back-end cost based on the loan volume on what you're able to establish through that process. Business blueprints to graduate to SBA loans, because it can help graduate and give you that foundation you need when it comes to business funding. So when that business funding and that history is there, there's always opportunity to get additional funding here in the future as well. After that, hopefully the funding is being able to then project your overall revenue as well as the company, so then that way you can keep growing even during troubling times that are out there. Looking at the idea of Book of Business and credit hybrid program, if you are looking for those funding options, please consider looking at the link here at the bottom where it says creditsuite.com/get funding. This is a way to open up the conversation with our funding team to be able to get a snapshot and look at what funding options would be available in this current position. As well, here is some once again, contact information here about business financing on any of the arrays that we have here of our program, or even through our Business Credit Builder program. The main product that we offer here at Business Credit is we have an ability to help individuals build up vendor accounts and trade accounts without having to use their personal guarantee. It's a great way to be able to fulfill that puzzle piece of having strong Dun & Bradstreet and corporate Experian report. Click here for this link if you have information, or go to our main website at creditsuite.com. If you text free training to the number below, then we'll be able to email some information out to you regarding that as well, or follow the link on our main website, kind of where the arrow was pointing. I think that's where it's directing, to be able to get that additional information, to be able to look at that training aspects of it. Once again, it's been a pleasure. Glad that we're able to be able to look through this information here with you here today. If you have any questions, feel free to be able to turn around and be able to help that as well. Did have a quick question here. It looks like there was a question regarding on 401k financing. There is another funding program specifically based on your 401k financing. That program is taking in your existing collateral, which in this case would be a 401k product, and being able to do in a way a business loan based off of that information. So the idea is you take the collateral of your 401k, you're going to lend yourself a business loan and then pay yourself back. So that way you're able to prevent the tax penalties from early withdrawal from it. If that is something that you're interested in, yeah, feel free to reach out to our funding team. One of the criteria specifically on the 401k program that's important to realize is it cannot be connected to an existing employer. Meaning that if you're currently employed with a company and they are contributing to your 401k on a monthly basis, unfortunately, that type of structure, it won't work. But if it is a self-directed 401k and then you have control over that particular program, then it does have the ability where you can lend on it. Last I heard is that the value in your 401k that would be needed before it would be able to fall into this criteria would need to be around 50,000. So as long as it has 50,000 or more in that 401k, then it has that ability where it can be lent off of. But if that is something you're also interested, feel free to reach out here to our finance team or visit us at creditsuite.com, and up at the top you can click the option that says business loan, and that will give you some more detailed information about all the different funding programs that we offer here at Credit Suite. So thanks, Brian, for that question. Hopefully that gave you some more information here on it. Once again, any questions that come up, feel free to check out our website at creditsuite.com, and feel free to click on the information that says business loan to look at all the different options we have for business financing. And if you are specifically an insurance agent and you're looking to learn more about book of business, feel free to contact us through our website as well. Thanks as well, and everyone have a wonderful day.